Welcome to the latest episode in our series, Getting Ahead of the Great Wealth Transfer. We've talked a lot about how this huge $84 trillion transfer of wealth will and should affect how people are thinking about inheritances and estate planning. Today, we're going to dive into the impact this may have on business owners as they plan for succession amongst this great wealth transfer. I'm Jim Zahansky, Senior Partner and Chief Strategist at WHZ Strategic Wealth Advisors. I'm also joined by Managing Partner of Advisory at WHZ, Liza Langevin. Good morning.
Good morning.
And today I'm once again joined by Senior Partner and Chief Investment Officer Lawrence Hale. Hi, Lawrence.
Morning, Jed.
Good morning. Thanks for being here. And we have a special guest this morning. We have Kevin Lewis. He's the founder of Rocklobs Consultancy, an advisory firm that advises business owners on succession planning and business valuations. Good morning, Kevin.
Good morning. Thanks for having me.
Yeah, nice to have you here. For business owners, their company is frequently their single biggest asset that they have. And as this continues to think about that wealth transferring across generations, succession planning and valuation is really to bridge that gap. And it also helps us as planners, financial planners, help them think about how that business, the wealth it is now and what it will be in the future, helps them after they sell it or transition it on a succession basis. Kevin, let's start with you. From a business succession standpoint, why is this conversation relevant and urgent right now?
Well, firstly, there's just a lot of business owners in this situation of thinking about succession and what they're going to do. So that creates, a lot of supply into a marketplace where it's probably uncertain that the next generation has as much demand to want to work like business owners today. And at the same time, you've got a lot of uncertainty in the marketplace. And you think you have a lot of time, but that uncertainty creates risk. And for those people that start a year or two before they want to get out of their business, it's far too late to have a really strong succession plan and have a business that somebody else wants to buy and run.
Yeah, there's no doubt. I mean, in the conditions right now, too, for selling and having a succession plan, I often find that a lot of business owners they're spending so much time in their business, they never focus on working on it or getting out of it. And I don't know if you could comment on that, but, what you just mentioned about starting in advance creates a better yield, in essence, for the business owner. But it also gives them something to work on. It's working on the business and making sure that it's valuable enough. And they're getting the benefit of owning that business as they're holding the risk.
Yeah, somebody else has to value that business in a way that may be different than you. And it's good to have somebody look at your business and say, hey, what is really valuable and how can it be run in a way that somebody else could buy and run it that's not you? So much of businesses depend on the relationship of the business owner with their customers. Yeah, and that has to be maintained through succession. So who really is going to buy this business? Who is going to value it like you do? And who is going to keep it attracted to customers? And is it really working on something that is valuable? And those questions need to be answered in an early enough time that you had a chance to fix it.
Yeah, no doubt. Well, thank you. That's good insight. And it links to specifically this great wealth transfer concept in the context of, as we stated at the outset, most of the wealth or the majority of individuals' wealth is in the business they own. So if we don't value it right, they could be leaving money on the table. They might not have the right succession to keep customer continuity. That service that they provide or that good may not have the same level of potential success if they don't start thinking about it in advance. So,
well, and what about the interrelationship? Most of these businesses had real estate holdings.
Yeah.
And those real estate holdings actually are dependent on the value that the rental of that business provides to those assets as well. So it's doubly bad when you have that concentration, not just of the business itself, but the land and the real estate the business has. Makes it even harder to work through.
No, you're right. And I mean, I think that's a good, I think, Lawrence, when you think about someone's real estate assets plus the business and sort of all of the value they're carrying from an investment and valuation perspective, how does this environment sort of change the stakes for business owners?
Yeah, Jim, in addition to the concentration risk, it is really, really important that the business is structured in a way that is appealing to buyers. And, in the current environment, there's a fair number of buyers that are out there, but they're a lot more disciplined, and capital is plentiful, but it's not cheap. That means the valuations are being scrutinized more closely. So even more reason for business owners to be serious about how do they structure their business? How do they make it appealing for sale? And, from a planning standpoint, oftentimes business owners don't really know what their business is worth. So many meetings I've been in, oh, my business is worth $1 million or $5 million. Where did you get that figure? That's what I think it's worth. Well, there's really more discipline and more work that needs to be done, because you may be woefully overestimating the valued business or woefully underestimating. And the way to maximize that value is to have the discipline and the structure in place so you can see consistent cash flows, the non-dependence on just the owner, the additional management or folks in the business that can provide additional continuity during any sort of succession.
Yeah, no, you raise a good point, because the valuation, and the methodology one might use, and I don't know if you could comment this, Kevin, your firm would help them think about the right market methodology and how to value the business, but also in relevant terms, sort of making sure that the value of the business is real from a transfer point of view, a sale point of view, or some sort of, however it's being valued, it's a real number, which I think, maybe comment on sort of how that valuation methodology is adopted, and maybe, how you all consider it for certain businesses as you sort of get into them.
Most of the time, we see business owners undervalue their real estate and overvalue the real value of their business. The real estate is quite easy to value. It's also quite easy to get debt on. So it can be helpful in a transaction to help bring debt into a purchase. But really, a business only is worth, either at a very low level, its book value of the assets that it has, and sometimes not even the assets that it has. But, we're looking for true profit from the business, and you'll get to subtract from that the owner's compensation, which is the biggest kind of add back that you allow in valuation. But you're going to have to add back somebody to take their role, the new business owner. So, it's really the profitability of the business, not the revenue, not the reputation. It's how much business will this money make under somebody else's ownership.
Yeah, and in particular, if there's a way to think about how that new owner might be successful, then you can think about things, what's have multiples it's giving. And Lizel, with you leading the advisory team here at WHZ, I'm imagining with the business owner clients you're working with and those sorts of things, when they think about succession, and you're hearing about these valuations in real estate, I mean, how is it that you and the team are advising clients, or what are you seeing, and how to work these things through to their own financial plan?
Mm-hmm. Yeah, it is, and we mentioned it's part of their overall financial plan. So it's something that we have to incorporate into their plan. How much is that business going to sell? Is there real estate, to Kevin's point, that's going to also be part of the transaction? But also there's another whole dynamic where they might look at it as purely a transaction, and it is more than that. I mean, there's family dynamics potentially. There could be, you're shifting your identity from a business owner to now a retired business owner. That's a huge step. And that's comes with a whole bunch of emotional considerations too. So it's a little bit of incorporating it into the plan. Of course, that's the biggest part of our job, but also it's that emotional side too, and having them consider what concerns they might have as they transition out of the business.
Yeah, there is so many emotions. The business owner advice is a challenge, in so many ways, because as we've talked about, it's sort of one of these scenarios where most business owners are really ingrained in their business, keeping it going day to day, helping it grow, helping it serve their customers, their clients, whatever the base of their business is, that's their focus. And then when they go to sell it, there's so many emotions involved. Are they selling it to family? Are they selling it to an employee? Are they selling it outright in the marketplace? different valuations go with those themes. Kevin, I don't know if you could comment, but like, when you think of it, an ownership transition to family, how realistic is this assumption for the clients you worked with?
I think it's realistic to assume that there's a family member that is around that might be able to take it on. I think what's harder is that family member, do they really want to do it? Do they know how to do it? Will they succeed? And how does your personal wealth risk get better or worse when somebody else is running your business and probably has a lot of owes you, or you have debt on that business to help them pay off. So just because you do the transaction of handing it to the family doesn't mean that you're done with succession. You may and most likely are financially tied to that business in some way for that family member to succeed. So it's worth looking at other types of structures. Are there employees that might want to buy it? Can you sell it to someone who's willing to come in and finance a deal and take the business and run it as well? So it's worth looking at the different alternatives and making sure that the family member that you're going to take it on, that you have confidence in them to be able to run it and take over the relationships so key to the business.
Yeah, that's so. Speaking of the emotions you brought up in this sort of transaction, that certainly outlined one of them. You were talking about how we sort of focus on that at WHZ.
Sure. And I mean, transferring to a family member of business, it's very similar to the conversation we had about transferring wealth, like having that family conversation with the next generation if they're taking over the business, and setting expectations, making sure that they understand the finances and how to structure, how to keep clients, how, all of those things are so important in that transition so that the business can continue to run. But it's having that conversation first and making sure that those families are set up for success, I think. And that's something that we've done before. I mean, we've had those tough conversations and making sure that everyone's on the same page.
Yeah. Is it fair to say, Lawrence, is these are sort of, if you think about the business owners you've helped through succession planning and financial planning and investment management, is it fair to say for a lot of the conversations, those succession plans that are family-based, that the clients might be willing to take a family discount or give a family discount, or they seem to be emotionally tied to that? Would it also be fair to say, though, that if they sought the true market value versus the family discount, they'd have the greatest wealth build?
Yeah, I think that you're spot on, Jim, that there's usually a difference in valuation or what would be received depending on, are you selling within the family or outside of the family, and how marketable the business is. You may have a family member who's already been in the business and is an easy fit, and you're able to structure a deal that works very well financially for all parties. It is a transaction though, and I think it's really important that business owners, particularly if they're selling to family, understand the terms, make sure that it is structured in a way that manages their risk. If this is a significant asset of theirs, possibly the most significant asset of theirs that they've worked their entire life to build, to extract that value, they need to have the confidence that if it's some sort of term structure or if debt financing is in place with the new owner, that they're going to have confidence that those payments are going to be received. Are they going to retain the real estate? And if so, is there a rental agreement in place that they feel confident that not just the cash flow will come from, but also that the tenant will stay in place? So there's a lot of considerations to help the business owner, the seller, manage their risk and make sure that it aligns with their own financial plan and meets their needs.
Yeah, no, good thoughts. And Lizel, on a practical level, if you sort of put that into play, I'm a business owner listening, we have in our minds, we meet with your team, we have in our minds that I'm going to sell my business for $1 million and I'm going to be set. Talk to sort of the practical idea of what this actually means when you build this into a financial plan and a lifetime income plan, like the inputs and what it really means so that you can sort of validate those assumptions for people, be sure they get the right pricing.
Yeah, exactly. And I mean, that's the first step, is to build that financial plan, incorporate that potential value. Of course, there's going to be taxes we have to consider. So we're going to be working and collaborating with an accountant. There are estate updates that will have to happen as well. Working together with an attorney to make sure that those happen. And of course, the business transaction as well would need an attorney to make that work. So it's incorporating these things into the financial plan, making sure that, so you're selling this business, let's say in a year. Okay. So that's coming into the plan. How much of that do you need to pay taxes? And then after that, what are you investing and what's going to be the rate of return over time so that you can get some income off of that instead of getting it from your business? So that's also a shift too. It's like, oh, okay, I have this asset that I've been building up for my whole life. And now I'm at the point I'm going to sell it. It's converting to investment assets, and you're taking money off of that versus earning your profits over time. So it is, again, a mindset shift and making sure we have those inputs right so that we can say, okay, yes, you can do this. You can sell the business and it's going to yield this much and you'll have this much income, and we factor that into their whole picture. But it's collaborating with those outside advisors as well to make sure that we have the full picture and that we consider everything that might happen during that year of sale.
Yeah, almost in every time we talk about a topic of the great wealth transfer, we have to talk about the people viewing this as having the right team, right? And we've mentioned here quite along is you have to have a team of advisors to both talk a bit about what's the right valuation methodology, the right value of your business, the right way to make sure it's successful after, and then specifically how that transitions to your own financial plan. And is it enough to meet the goals and wishes you want to achieve in life based on all of the sweat equity you put into your own business? And that's really at the heart of this sort of work is this, as you said, Kevin, the sooner you start this, the better, because it is iterative. We don't want to get back into a lower price because we don't have time, right? We need time. We need, what's you think the right time people should be starting to engage in this with firms like yours that collaborate with firms like ours?
Well, it's hard to imagine that this isn't the single most important thing in a business owner's life. Like, you've spent all this time to maximize the value of the business to you, but now you need to start to maximize the value of it to someone else. And that takes time. It's not going to happen in 1 or 2 years. I think that, somewhere in the 3 to 5, maybe even longer year time frame, you've got to really be looking at this and figuring out how to make the business work without you there and have the P&L make profits that people are willing to spend on.
Yeah, and that's it. Lawrence, you mentioned concentration risk that business owners are carrying. So, if I have a net worth of 3 million and 2.5 of it's in the business, where's the concentration risk, right? And so mindset wise, they're used to growing that. They sell the business, have the proceeds, it's invested in some strategy. Its concentration risk is reduced, but what's the mindset of the people having to make that transition, and how have you guided them?
It is a transition, and it is a big shift for a lot of people to think about, I'm actually generating income from something I'm not actively engaged in participating in, like their business. And getting ahead of this so that you understand how this potential deal layers into your own needs. And I think that's another thing, is to sort of think about this creatively. Think about, there's not one single deal structure to sell a business that you have to follow. You can work with the seller, hopefully, and come up with a deal that works and aligns with your financial plan. You personally maximize the business value and works for the buyer as well.
Yeah. Well said. Well, I mean, we've talked a lot of good themes about, for business owners in particular, how do we be sure that this wealth transfer is set up, knowing it's likely the largest asset of someone's net worth if you're owning the business? It's also their life's work for the most part, right? if you want to take some practical next steps, Kevin, what would the business owner or listener do next to initiate this sort of thinking?
Well, I think the first thing is understanding how bankers and buyers might value it. And then what are the steps to realize some value that will get created for them? And if you're thinking about succession plan to people you know, either your family or your employees, really getting an understanding of their ability to run the business.
Yeah. Yeah, those are good practical steps. Lizel, how would they take that thinking and transcend it to themselves?
Mm-hmm. Yeah, I mean, well, first of all, having the clarity of who's taking over the business and making sure that they know what next steps are, and that reduces stress. I think too for them personally, building that financial plan. So once you have that valuation in place, working with a firm like Kevin's, and then inputting it into your financial plan, understanding what that will look like over your retirement lifetime, collaborating with those attorneys and accountants to be sure we have the taxes right and all of the documents and estate planning down now that things have changed. And so those are some really big things to tackle through this whole process. And we're there as an unwavering partner, as we say, along the way in all of these situations. So.
Yeah, because there's a lot of pieces to coordinate there. And what we find in the end of those sorts of things is, clarity emerges, confidence emerges for the client, and they're able to sort of move forward with that succession, knowing this is going to work out. My business, my service, my clients, my everything that I'm delivering in value for my business will move forward, and I will too. And so that's a really cool thing. Great discussion. I don't know if when you think about this great wealth transfer for business owners, maybe one key takeaway that you want the listeners to take away from this really great discussion. Kevin, mind starting?
I would get an outside view of your business.
Yeah, that's well said. Always important. And when you say mean outside view,
let other people think of the value, not the value you think of it.
Perfect. Yeah, good one. Lawrence, what would you add?
I would say make sure you're spending adequate time working on your business and not just in your business.
Mm-hmm. Yeah.
Lizel?
I would say once you have that valuation, make sure it's in your financial plan and that you know what that will project into for the long term in your retirement.
Yeah, and I'd add on to what you just said was whatever process you use, whatever companies you work for with, you have the right team, the right advisors, make sure it works for you. And then be sure that whatever you agree to is something that you are ready to do mentally so that you can execute your plan with the best of intentions, but also move forward in life. So really great discussion. I want to thank each of you for your time and input today. And if you that are listening today, you can find great information and resources for navigating generational wealth, estate planning, and business succession in our free guide, Smart Strategies for Generational Wealth, which you can download at whzwealth.com. We appreciate your time and look forward to helping you plan well, invest well, and live well so that you can look forward to living with absolute confidence, unwavering partnership for life.